So, from the Fed to warnings of a weakening global economy to the ongoing trade war between the U.S. and China, there's Brexit. The market certainly is not without its challenges right now, but our guest tonight says the bull market is still alive and well. We welcome back our friend Jeff Saut, the market strategist at Capital Wealth Planning. Jeff, good to see you again.
Always a pleasure.
But if the global economy is slowing down, that has to take a toll on earnings. Tariffs are still in place. That's taking a toll on earnings. What's going to power this bull market higher in your view?
I think it's going to be earnings. I mean, you know, Steve Leisman and my dear friend Arthur Cashin are two of the calming voices on Wall Street. And there's not going to be you know this about me. I lived in D.C. for a long time. I'm still pretty well connected in D.C. There's not going to be a trade deal with China in the near term. Earnings have slowed, but they're going to reaccelerate as we get into 2020. The economy's not going into a recession. GDP growth's probably going to be slow at about 2.25%. But that's actually the mother's milk for a decent stock market. And people, I'm telling you, I'm out here speaking not just to portfolio managers, but to individual investors. And they're not just cautious, they're scared to death. And that is not the way secular bull markets end.
We are, however, hearing from companies that have reported their earnings in this past quarter and some that are starting to report now that the lack of a trade deal, the tariffs, and the dollar are all having an impact. What makes you think that companies will be able to overcome those headwinds?
Because I think the economy is going to re-accelerate, Sue, and I think if you're using Ed Yardeni's estimates for next year, he's around 177, 178, and my work shows that a fair market multiple is 19 times earnings in this low interest rate environment. Put a 19 multiple on 177, 178 dollars, you're talking about 3,200. And I would remind CNBC.
3,200 on the S&P you're talking about.
Yes.
Yeah.
I would remind CNBC that for 3 weeks at the end of September, I admonished that our models that called the August low were telling you to be very cautious in the first part of October.
It's a market of stocks, though. I think you've told me many times before, not a stock market. So who will power us higher? Which sectors do you like right now, Jeff?
Well, you know, Wall Street will always, 55 years of looking at markets and 49 years, my gosh, I'm getting old, in this business, the investors will always pay up for true growth. So technology is probably at the top of the list. I still like financials. It's not been a good place to be for a while. But I like energy, particularly the midstream master limited partnerships. Where I don't like is where everybody crowded into utilities and consumer staples.
Jeff Saut with Capital Wealth Planning. Always good to see you. Thanks for joining us today.
Pleasure.
You bet.